Hello to you all. Welcome to the final lesson for now of the introduction to the stock market. I'm going to put now everything together for all the previous parts I was explaining separately, and I'm going to help you how to put together all of these, how to have a trading plan, the risk management, all the questions that you need to ask yourself, the checklist, and so on. So yeah, let's get on with it. We are going to see the parts for a trade selection, the risk management, trade execution checklist, the trading plan, the learning process, and putting everything together. The trade selection. First, we will have to ask ourselves, which market do you want to trade? Do you want to trade, for example, index, like me, SPI, SPX, NDX, QQQ, or you want to trade asset like Tesla, Apple, Microsoft? You have to make the assumption, where do you think it's going to go? Through the technical analysis and through fundamentals. It's going to be bullish, bearish, sideways. What's the time frame? You want to trade weekly, monthly, daily, maybe even yearly options? Of course, you have to be aware of the volatility and the realized volatility at the same time. What is the risk reward for your trade? How much you are going to win, how much you are going to lose. It's very important. Then we are going to go into the risk management. So in this case, before we enter the trade, we should always know what's our risk reward ratio for the trade, what's our probability of success, what is the maximum loss which we are going to accept for that trade, what's the expected return and the target profit for this trade, and does the new trade maintain balance or diversification to the portfolio. Once we are in the trade, we can ask ourselves, did the stop loss was reached or the maximum allowed? Did it reach the target profit? Is the reward of keeping the trade open still worth the risk? Did something change in the market and maybe you want to close it or change it? And after that, it's very important for you to ask yourself, did you follow your risk management rules for this trade? And if you did not, why? Why not? I have some rules for you to help you start in this process. I don't recommend to risk more than 2% of your capital on any single trade, the maximum allowed risk per trade. If you lose more than 10%, stop trading for the rest of the week or the month. Try to diversificate if you go multiple trades, like for example, use different sectors, industrial, economic, for example, SPY or NASDAQ or Russell, use different parts so you can hedge yourself. A good idea is to have 5 sectors plus at the time. So yeah, make adjustments when a trade is going against you. But this part is mostly if you are going to trade monthly or maybe weekly, monthly or higher type of options. The trade execution. For this, first we will always have to calculate the implied volatility and take a look at the realized volatility. Are there any company earning releases if you are going to trade an asset company around? Any new FDA decision? Any new Federal Reserve decision or meeting, like for example, which is going to happen now or it's happened in the past with the interest rates? Any big risk coming, like for example, which is the war in Russia with Ukraine? A stock moving slowly is likely to increase in velocity and vice versa, Like I said, and for this you will have to take a look at the historic volatility. At the same time, you have to look at the implied volatility. It's the current IV high or low, and understand why it's that way. Like for example, it's a good reason to be high, and if there is a good reason to be high, maybe you should sell the premium. You have to have a clear picture of the risk always. The goal in the end is to sell the most expensive policy relative to the risk. At the same time, like I said previously, evaluate other products and markets. Don't focus just on one. Sometimes, for example, when you are picking the strikes and you want to sell, like in my case, like I said, 20-30 delta. But for example, sometimes, 18 or 32 is going to give me a much better risk-reward ratio. So why not? You should go for it. And the same, for the spread. Sometimes, for example, I know you want to trade 5-point spread, but maybe a 10-1 is going to give you much greater rewards and profit. So it's also something you should take a look into it. For this type of strategy, which I recommended until now, always make use of implied volatility and Vega to understand how low you can go for a price. Now let's take a look at the checklists. So, before the trade, market that you are going to trade, direction of the market, did you check the volatility conditions? Did you look at the historic volatility, at the implied volatility? Did you check the skew? This one, it's more for advanced professional traders, which wants to take different type of ratio spreads. But yeah, for now you can ignore it. What is the strategy you will be using? If it's a complex spread, how will you execute it? What is the maximum allowed loss? The expected return, the target profit, the size of the trade, the parameters, at which point you would make adjustments, if any. Do you know the possible adjustments to make to the trade if needed? And then we go to the trading plan. So first you need a mindset. And your mindset, it has to have, you need to be dedicated, disciplined, bold, flexible, and humble. One of the biggest reasons the people fail, is that they exit from losses early enough. Bad trades provide feedback on how you do it better next time. That's why, for example, if you are going to perform a trade from the beginning, you know the risk that you're going to have, and you, for example, you already perform calculations on the history on that type of percentage or credit or whatsoever, and you saw that it's a fixed rule for you, you just set it and forget it, because the more you are going to interfere with it at the same time, the more it can destroy you. But like I said, this is more for bigger periods of time. When we are going to trade, like in my case, daily or weekly, we don't have to worry about this so much. We are going to worry more about the rules, to respect the rules. So yeah, getting back to it, the importance of sticking to the process. You can be lucky, but how many times is that going to happen? So in this case, having a checklist is going to save lives, or as in this case, is going to save your portfolio. So the type of questions your trading plan should answer is: what is your goal? How much do you want to make per month or per year? Is it realistic? Which markets do you want to trade? Which strategies are you going to use, and under which conditions? What's required for you to enter a trade? Why would you exit a trade? The conditions, for it. Is it winning, losing? The risk management percentage which you are going to have for it. How much would you allow yourself to lose from a trade? And of course, how are you going to execute those trades? And this is best to have a trading journal to keep it all saved. At the end, I'm going to show you a small example on how it should look like. So then we go with the learning process. And for the learning process, the best thing that we can have is the trading diary. It's going to be like the black box recorder from the planes. This is going to be for us, because it's designed to help you and give you the feedback required to improve your business and your trading activity. And the types of variables that you are going to require to have in it are going to be the entry and the exit time, the symbol, the price at the entry, at the exit, strategy, the margin required, the profit loss, the return, days in the trade, volatility, among many others. And then you should ask yourself, how many trades did you enter this month, quarter? How many were profitable? How many were losing? by this way getting yourself the win rate, your average time in the trade, your average loss, your average win. And with all of this, you would be able to make your yield per month or per year, and you would know what you are going to expect when it's going to happen. At the same time, it's very nice and important to get feedback either from a group or hire a personal coach or through educational from the internet. And of course, this is an ongoing business and activity. You should never stop learning and educate yourself into it. I always recommend at least one book, read one book every month or at least every 2 months. Now, let's put everything together and see how it will look like. So you see, for example, like I said, the type of strategy. We are going to ask ourselves the market initially, which we want to trade, the direction. We are going to check if we look at the volatility conditions, what it was the implied and the historical. Then, for example, the type of strategies, like if you want, for example, weekly, when are they going to expire. In this case, for example, we have for bullish a short put spread with a 20 delta put, 5 delta buy with a stop loss of 20% of initial credit. We are going to have a bearish, a short call spread as well with a 20 delta call sell, 5 delta put buy. This would be a call buy, not put. It's a mistake here. A side market of an iron condor made more or less with variation of these deltas from here. As well, if you want for daily, like for example, we are going to look at 5 to 10 delta, and if it's an SPI, we are going to look at 3 to 5 the spread point for the buy, or 20 to 30 for the XPX. As well, we are going to have a stop loss of 20% of the 200% of the initial credit. Before I'm going to enter a trade, I'm going to take a look at the volatility, at the pull car ratio, and a general opinion of all the other people regarding this asset. And once I have all of that, I'm going to put everything together, like date, today, market, SPI, strategy, let's say for example a short put spread, the technical indicator which I have is telling me to go short as well. The put to call ratio is positive, so it's a 2 point something. The hidden volatility, for example, it's 10, and the implied volatility right now is 15, telling us that it's a good moment, for a premium. The opinion of and the sentiment at the same time, we can think about the sentiment or the fear and greed index as well. We can take a look into this one. If we have some relevant news, coming around, the position that we are going to have, the entry price, the strike price, the price of the spread, the margin, stop loss, win percentage, that we have the probability of winning, probability of losing with the stop loss, probability of losing full entirely, the expiry date of this, the total outcome which happened, the total capital after this trade, and of course some comments regarding this trade. So this is how should look a plan like of yours. So yeah, I hope you enjoy this course, helping you, and it's going to help you to start in this amazing financial market. Honestly, from everything that I saw so far, and I've been in Forex, in the commodity, and in the crypto, I like the option the most, honestly. The reason behind it is that the mathematics behind is not lying, it's purely based on probability. And once you understand this, you can take a lot of benefits, and you can have an amazing edge, by applying these concepts. I hope with what I gave, to at least to get you started, and as well as let you know that if you have any questions or whatsoever, you can find me on contact at Trader Life and on Telegram at Softkill21. And at the same time, I'm going to say that there is also going to be available a continuation of this one, which is going to be premium. It's going to be for payment, and in that one I'm going to show entirely the strategies which I'm using for myself, for daily and for weekly, And not just that, but also all the data which is behind it, because these strategies at the same time I took them, from some mentors that I have, and at the same time, I'm going to show all the data behind them, all the back tests supporting this theory, and yeah. But like I said, this is going to be as a continuation, and it's going to be for the premium part. If you are interested, let me know. More details are going to appear as well on a Trader Live in the future. So yeah, I hope you enjoyed, and thank you all for watching, and see you next time. Bye bye.